How better go, how better go there, how better go there, how better go where, how better go here, better go here, how better now, better go.
Make money with tax liens. Now, welcome back. Today's episode is all about make money with tax liens, or we should say tax lien certificates. For sure, everyone viewing this video wants to make money, and this is an alternative investment. Many people consider tax lien certificates an alternative investment once they learn how to do it. Now, the local government or the municipal government will be auctioning tax lien certificates this year and every year into the future. They've been doing it for over 200 years. So savvy investors learn about this investment, and once they understand it, they can do this year in and year out, and you can do it in 1,500 counties across the United States. So tax lien buying has been available for anyone that's interested for decades of time. Now, the county treasurer is authorized, along with the tax collector, to levy taxes on property. That's all property other than churches and schools. Now, if the people don't pay the property tax, then the treasurer will issue a notice of default. All right. Now, if the people continue not paying the tax, they will issue numerous notices of default. That's called due process of law, and they will confiscate the property. Now, what are they going to do as they start that confiscation process? Well, many counties will end up with thousands of these certificates. So across the United States, all 50 states are allowed to have tax lien certificates. However, it doesn't quite work out there. What really works out is that there's 3,000 counties. Of the 3,000 counties, all of them can confiscate properties and sell them at auction. But 1,500 of those counties, before they confiscate and sell at auction, will sell a tax lien certificate. So basically, half of the states and half of the counties will sell tax lien certificates. And we have ways that you can look all those up so you can know which counties are going to do that. Now, when the properties are sold at a tax defaulted auction, okay, when it's sold at a tax defaulted auction, the property no longer belongs to the county. They sell it to an individual. Today, what we're talking about is making money with tax liens. So 1,500 of the counties across the United States will auction tax lien certificates. Now, these auctions are always public auctions.
All right, ladies and gentlemen, let's get her going here. Start me off. Where to bid to go? Have it $1,000. Open it up.
Anybody can attend. Anybody can bid. And the county just wants the money so that they can pay their bills. So many people say, what is a tax lien? Well, what it is, it's a lien on the property that was put in place by the county. And in other words, someone's taxes are overdue, so the county puts a lien on the property and tells them, with a notice of default, you must pay your property taxes. All right, what is a lien on the property? It would be like a mortgage would be a lien on the property, or a judgment where an unpaid bill could be a lien on the property. Or if someone had a divorce and they had a child support, that could be a lien on the property. So a tax lien certificate is the first lien on the property. So the county wants to sell that. And why do they want to sell it? Because they need money to pay their bills. So a tax certificate must be cleared before the property could ever be sold or it could be transferred in any way. So that lien is the first lien on the property. And if that lien isn't paid, ultimately the county will confiscate the property. But they start out by selling a tax lien certificate. All right, this is an alternative investment. Anybody can be involved. They're always sold at a local level by the local county. It's a public auction. You'll know about it on the county website, and you get to know in the newspaper. All right, now this is a powerful way to make money. For example, tax lien certificates can pay 16%, 18, 24, all the way up to 36% on a tax lien certificate. All right, now different states have different rates, and this is always established by the legislature of that state. Now, look, I'm just giving a short video here, maybe 8 or 10 minutes video. All right, so this is an oversimplification of it, but you're getting it. So Florida, you can earn up to 18%. Arizona, you can earn 16%. In Illinois, you can go all the way up to 36%. My point is, I don't make any of those rules. They're always made by the legislature of that state. 1,500 counties is a lot of counties to buy tax liens certificates. They're all going to be sold to the lowest bidder. In other words, people bid the interest rate down, and I'll cover that a little later on. All right, so anybody can buy a certificate. The county's going to have a public auction. You'll know about it in the newspaper, or you'll find out about it on the county website, okay? Now, if the people don't pay their taxes after you've purchased a certificate, if they don't pay their taxes, then you could ultimately foreclose on the property. So let me oversimplify this. You raise your hand, you give your money to the county, you invest with the county, you give the county your money when you buy the certificate, they give you a certificate back, all right? Now that certificate has a redemption number of days. So the person that was in default has a number of days to pay you. If they don't pay you, you can foreclose and take the property. So oversimplification, you invest with the government, you get your money back from the government. If the property owner doesn't pay you, you get the property. All right, so you're getting the idea. You invest with the government, check back from the government. If you don't get paid, you're definitely going to get to the property. All right, so why are the counties selling these tax lien certificates? Well, if the owners have failed to pay, what that really means is the county's not going to have money to pay their bills. All right, so that's an important reason. What is the county doing with that money? What the county is doing is they're going to pay the firefighters, they're going to pay the police department, they're going to pay the county employees, they're going to pay for the fix the roads. You're getting the idea. So if the county doesn't get the money from the taxpayer, meaning the property owner, then they'll sell a tax certificate. If they don't get paid on that, then they're going to confiscate the property and sell that. So today we're talking about making money with tax lien certificates. People buy these certificates because of the generous, really outrageous interest rates that they pay. All right, all of those interest rates that they're paying, that money would normally go to the county. But in your case, you bought the certificate so you could earn 16, 18, 24, up to 36%. So don't bid them down too low or you're not going to make a lot of money. The county is using the money to pay the county's bills. So what's going to happen to that certificate if it's not paid? I know that's what you're worried about. Well, counties tell us 95, 97% even of these certificates will pay you. In other words, you raise your hand, you bought the piece of paper, you just take it home, sit it down, sit on your rusty dusty and wait for the people to pay. 95 to 97%, according to the counties, will pay you your money. So that means you're going to get 100% of your money back plus that high interest rate. And what you're doing is you're sitting on your rusty dusty, just waiting. So it's a passive investment. This is called an alternative investment, and it's a passive investment. All right, now what happens if you don't get paid? That's what everybody worries about. Oh my goodness, what's going to happen? Well, the county's issued you a piece of paper, which is a tax lien certificate. All right, now that piece of paper comes with a promise, a covenant. And the covenant simply says, if you don't get paid, you can foreclose and take the property. In many states, you don't even have to foreclose. They just send you the deed to the property. But in most states, you're going to have to go through a process. Now, while you're waiting to get paid is called the redemption period. That could be 2 years in some states, 3 years in other states. So you're going to have to wait. So you have no rights on the property. You can't go on this property. There's no work for you to do on the investor, but you have no right on the property. Anytime during that redemption period, the property owner can come in and pay you 100% of what you invested and the interest. If they don't pay you, you're going to end up with that property. Now, the states like South Carolina, if it gets to the last day, the state's just going to send you the deed. The counties in that state, that's what they do. Most states, they're going to have you go through a foreclosure process. Are you going to do that? No. You're going to hire an attorney to do that. Probably costs $500 or $700 to have an attorney do that. See those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. Folks, in the states that have small populations, there'll be hundreds of certificates. In the states with large populations, there'll be thousands of certificates. I've been to Cook County in Chicago where they had 100,000 certificates. I've been to Miami, Florida, where they had 65,000 certificates. You're getting the idea. All right, now people make mistakes. Don't make these two mistakes. If you're going to buy tax deeds or tax liens, my suggestion is always look at the property or have someone you know look at the property. Boots on the ground makes a difference. I don't know and you don't know. What if there was a hurricane? What if there was a fire? What if it was next to a pig farm? There could be something that had gone wrong with the property, and you might not want that property. All right, so you want to always look at the property. When you're there, look at the neighborhood. Why? Because if the people don't pay you, you're going to end up with a property and you're going to have to sell it. So does it really have value? There are properties that don't have value. So the two big mistakes you can make is one, not looking at the property, and number two, not having an exit strategy. I'm Ted Thomas. I'll see you on the next video. Don't forget, request your free auction list right below me.